a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about MLP ETFs. And these are very popular because of their juicy dividend yields. And we know that rising inflation is one of the biggest concerns for investors in the past few months, particularly lately. So investors are looking for assets that can deliver strong income streams to counter high inflation. That means they are looking for real yields that after inflation is taken into account. So MLPs, they represent an attractive investment options for income-focused investors. And in addition to very juicy yields, they also have relatively stable cash flows, and they also have solid growth potential. So that is why they have a certain popularity lately in recent years. They also benefit from rising oil prices, and that is another one of the biggest investment stories this year. So that is another reason why MLPs have done well. But these are a little bit complex asset class assets. So that is why it is important for investors to understand them properly before investing in them. So what are MLPs? Master Limited Partnerships, or MLPs, they are involved in natural resource related activities, including oil, gas, coal, timber, etc. Now, most MLPs, they operate in the energy sector, and they hold cash generating assets. They're involved in transportation and processing of energy commodities like natural gas, crude oil, and other refined products under long-term contracts. Now, to qualify as an MLP, they should derive 90% of their income from qualifying activities, which includes production, processing, refining, transportation, storage, etc., of natural resources. Now, when they qualify for that, then they don't have to pay corporate income taxes. They are treated as pass-through entities and not subjected to corporate taxation. So now let's look at pros and cons of investing in MLPs because they are pass-through entities. They do not pay taxes at the corporate level, and that is the reason why they have very juicy dividend yields. Now, they operate under long-term contracts, so that is why they also have rather relatively consistent cash flows. And unlike E&P, exploration and production energy companies, these MLPs, their share prices are not, their profits are not highly correlated with energy prices, but they are correlated. Further, MLPs have low correlations with many other asset classes, including equities and commodities. So they add some diversification benefits to stock-focused portfolios. Now, the cons are the biggest disadvantage is their tax issues. So if you invest in MLPs, they come with complicated tax issues, and many investors avoid investing in them just because of these tax issues. These MLPs issue K1 forms, which we all know are very complicated. And since pipelines run through several states, investors may be required to file those K1 forms and tax returns in several states. Now, thankfully for investors, some of these tax headaches can be avoided by owning them in the ETP, exchange traded products forms. These ETPs issue form 1099 and not K1. Now, MLPs are also, sensitive to rising interest rates, but historical research, historical data shows that they should fare better than REITs and utilities, other high income yielding asset classes in a rising rate environment. So I mentioned exchange traded products. So should investors own MLPs, MLP ETFs, exchange traded funds, or MLP ETNs, exchange traded notes? Now, ETFs that have more than 25% of their assets invested in MLPs are treated as C corporations for tax purposes, which introduces another layer of taxation, and it results in some tracking error relative to the index that the ETF tracks. And now the advantage is that a significant portion of the distribution is tax deferred, so which makes these ETFs more suitable for taxable accounts. Now there are some ETFs which hold less than 25% of MLPs, but then their performance is not highly correlated with the asset class, MLP asset class, or major MLP indexes. So I'm not discussing those ETFs in today's presentation. Now, other option is to hold them in exchange traded notes form. So ETNs do not hold any securities, so that means there is no tracking error, and they will very closely track the return of the index because they do not actually hold any securities, but exchange traded notes, and I have discussed them in other videos, they come with their own issues, particularly credit risk, because these are unsecured debt instruments, so they carry the credit risk of the issuer. Now, the distributions are taxed as ordinary income taxes, and so that is why these ETNs are more suitable for holding in tax advantaged accounts. Now we'll take a look at three ETFs, two ETFs and one ETN. So let's go to the quote page on Zacks.com to take a look at those ETFs. So the first one I'm highlighting is by Alerian. It is the most popular MLP ETF. Ticker symbol is AMLP. It holds energy infrastructure MLPs. This is structured as a C Corp because it holds more than 25% of its assets, invests more than 25% of its assets in MLPs. So no K1 headache, and a part of the distribution, in fact, most of the distribution is tax deferred. And as I mentioned, it is the most popular with 6.3 billion in assets and has an expense ratio of 90 basis points. To learn more, you can go to the quote page on Zacks.com. You can read our research report, articles, and you will see the very juicy dividend yield. Then you can go to the external home page, the ALPS web page for the ETF, and they have some good research. You should read that, study a little bit about MLPs, and I mentioned no K1, qualified dividends, tax deferral. Sorry, these are the advantages of this ETF, and you can also look at the composition, what it holds, pipeline, gathering, processing, and you can also look at the MLPs that it holds. Now, the second one which I'm highlighting is an ETN. It is one of the oldest ETNs in the ETF industry, in the fund industry. It is by JP Morgan. Alerian MLP Index ETN, ticker symbol is AMJ. Very popular with 2.5 billion in assets and has an expense ratio of 85 basis points. And as I mentioned, it is subject to issuers JP Morgan's credit risk in this case, and I don't expect JP Morgan to fail. That is not what I'm implying, but this is something which investors should keep in mind. no tax deferral, and distributions are taxed as ordinary income. So that makes it more suitable for tax advantaged accounts. Again, to learn more, you can go to the quote page on Zacks.com, and using the link, you can go to the external web page. You can learn more. This tracks the same Alerian MLP index, as I mentioned, expense ratio of 85 basis points, and this webpage describes the risks of investing in ETNs. So take a look at that, and the underlying index will show you what it actually holds, what it actually tracks. It doesn't hold anything. Now, the third one I'm highlighting is by Global X, and I included this because this is one of the cheapest MLP ETFs. This holds midstream MLPs. This is also structured as a C Corp like the first one that we discussed, so no K1, and distribution tax deferred, has 1.1 billion in assets and an expense ratio of 46 basis points. Again, you can go to the quote page on Zacks.com, and 7.32% dividend yield, very attractive. And using the link, you can go to Global X web page. Global X also has some good research, so you can read that. This invests in midstream pipelines and storage facilities, which I mentioned have less sensitivity to energy prices, unlike energy stocks, and high dividend yield. And you can look at the holdings and other details if you like. Now, on this slide, I have the performance over the past 1 year. Now, these three funds, they have returned between 43% to 45% over the past 1 year. And the first one, AMLP, has the best performance, but performance is pretty similar for all three, whereas the S&P 500 index has returned about 14% over this period, mainly because of the index's decline this year. But look at the returns volatility. So if you're investing in MLP ETFs, be prepared for a volatile ride. Now, on this slide, I have the performance this year. These have performed very well this year, and one of the reasons is the surge in energy prices. So the three ETFs have returned around 14%, whereas the S&P 500 index is down about 8% year to date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I will see you next week.